Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face.
I think there's no better place in the country to be investing than Los Angeles.
What is the problem that you're solving and for who? Like, what is that specific pain point?
Sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
I want to see somebody that isn't going to stop. You know, this person, you just feel like they're gonna make it work.
Today's guest is Karl Alomar, who is a managing partner at M13. Previously, he was also the COO at DigitalOcean, which he helped grow to more than $200 million in annual recurring revenue. Karl is also a serial entrepreneur who had 2 previous exits. Karl, welcome to the show.
Hi, thanks for having me.
Yeah, and obviously a lot to discuss with your fund. So with M13, what areas is the firm kind of focused on right now?
So where we just define ourselves as a consumer tech firm, having said that, to be more specific about our thesis, we kind of really focus on consumer behavior and the main avenues in which consumers, spend money and interact with commerce. But our focus is the technologies that are changing that behavior over the next 10 years. So the thesis we have is that we'll invest into technologies that drive the change in consumer behavior over the next 10 years. We want to move with the flow of the currents and make sure that we're always thinking about where the consumer is going rather than just kind of filling in gaps of quick fill-ins of short-term need by the consumer. We see a kind of 5 to 10 year horizon on investments. So we like to think about, what the consumer is going to be doing 5 to 10 years from now.
Right. And then with the firm itself then too, what is kind of those average check sizes? What stages you're investing in as well?
Yeah, it's a couple $100 million fund. Our sweet spot check sizes are like, let's say $2 to $7 million is kind of where we've ranged. Letters are fungible. So series, a late seed, Series A, and early Series B, it really just depends on the way that the companies are defining it. I would say we kind of invest in 2 categories. We have our core positions where we have, we want to get a certain amount of ownership. We want to put in a nice size check. We also are interested in what we call feeder checks, where we look at companies at earlier stages. We either really believe in the founders or just think there's something really exciting about the business, but they're not at a stage yet that warrants a big multi-million-dollar investment.
Yeah.
And so we'll do a $250,000, $500,000 check to kind of get in the game, help the founders, try and get the business to a point where we really feel it's ready for a Series A or whatever you want to call it.
Right. And then for you guys, then what does that due diligence process look like as you're going through these companies?
Yeah, so the feeder due diligence is a lot lighter. It's really more of a belief, and it's kind of really driven by the partner that's driving and the intent of that partner. As we get into core investments, which are the more meaningful checks, it's obviously a much more structured diligence process. We have a process that can be kind of pulled into a 2-week sprint if necessary, but generally, it is spread over a long period of time. It's sequence of meetings, in terms of just making sure that we have a relationship with the founding team and with the executives. And then ultimately we go into a process where we do an initial review. We do like a 1-page memo. It gives an outline of the business, outline of the market, what we think the opportunity is. We then bring the company in to present to the investment team. We do that on Mondays. So we're always inviting a couple of companies every Monday to come and present, whether it's remote through video or in person.
Yeah.
And then we go through a much deeper dive. If we decide to move forward, we want to go in and look at the customers. We want to go in and look at the financials and the metrics. We want to really, really build a relationship with the executives and have true belief that they're the ones that can build the business. And that culminates into a much more detailed analysis that we present into the committee. And then there's 4 committee members, we vote, and ultimately that's the decision-making process by which we make an investment.
Yeah, and then going a little bit deeper into those founders themselves, and what are the questions you're asking them, and what are you trying to figure out from them if they are the right team to move forward with them?
Yeah. It's tough because, it's very common that founders, not a full team of founders isn't going to last the life of a business, right? So we got to think about how strong are these founders? How far can they take the business? At what point does the business need to start bringing on other talent?
Right.
We really focus on a couple of key things. What's the vision? Is there a big horizontal vision? Usually there's very, focused attention in the early days, which we respect and we actually want to see.
Yeah.
But ultimately, where is this thing going to go? And do they really understand their business?
Yeah.
Do they really understand the market? Do they really understand the metrics, the economics? Is this really, is this team really, can we sit back and just trust that they know exactly how this whole thing's going to run?
Yeah, and with that too, in that process, then what are some of those maybe red flags or things you're like, yep, that's just a no-go for us? What are some of those things to that diligence process?
Yeah, so definitely vision, as I said, is one big thing. So we want to make sure that we're dealing with an opportunity that is actually going to have an impact on consumer behavior.
Sure.
So, feature versus product is a lot of things we think about, like, are they just presenting a feature, or is this actually a full product that has potential to expand into a suite of offerings? And how wide is it? Just a very tight vertical audience, or is this something that can be applied across a wide marketplace? So just really understanding those components of the business really allows us to understand if the business has true potential. The underlying economics of the business are really important too. We just really want to know that the business is actually going to build towards positive economics. It doesn't have to be positive economics today, but does the model make sense? And often we've seen companies where they present this business, it's growing like crazy, and then we look at it and go, but you're never going to make money. There's just no mechanics here unless you double your pricing or do something really disruptive to the growth that you're enjoying. So those are some of the key things that we're really paying attention to, and we make sure that are in a good position so that we can actually make a commitment to kind of join the journey.
Yeah, and for those who aren't like familiar, like how long does this diligence process take? Obviously, it's going to be varied across different companies and everything, but like, can you talk to like how long this process can take? Yeah,
listen, the ideal scenario, the way we always think about it is when you get involved with a founding team, you're getting into a marriage, right? Yeah. It's not, it happens, and it happens regularly, but I always feel like there is a risk you're taking when you just dive into a deal and within 2 weeks you're giving a check to a founder. It's a high risk. You don't know what you're dealing with, and in a month the whole thing can blow up for reasons that have nothing to do with the business. And so for us, we try and establish relationships. We're trying to build a community of founders. We're trying to get introductions early, establish relationships early. Part of the reason why we do these feeder checks is because it allows us to kind of really get to know the company and really understand their business well before we're writing a big check and becoming, a meaningful member of the cap table. And so the ideal scenario is we're in a relationship with the founders for months before we get to the point that we're actually looking to make an investment.
Yeah.
Now, the reality is you don't have that luxury, right?
That much time.
So as I said, we've created a system whereby, if necessary, if it's a competitive situation, we can go through a pretty good, solid, heavy process over 2 weeks and get to a decision and move forward. It is tight, and in some situations we've lost deals because, frankly, other investors are willing to jump the gun and jump in. I mean, our caution is that it's as bad a move for the founder as it is for the investor to move that quickly.
Yeah.
But different people have different decision methodologies around that, so we can't judge that. But I think the most realistic time frame is like a 4 to 6 week time frame. From the point that we start initial conversations, we socialize amongst the partners, we have the founders meet 1 or 2 partners, we bring them in to actually present to the company and the investment team, and then ultimately we negotiate and decide on the construct of the relationship. And I think that also gives us enough time to really begin to get to know a founder and a founding team before we make the commitment to dive in as a full-fledged partner. Yeah,
and can you talk to the actual decision-making process between you and the other partners? Like, how does that actually work, and how does that go typically?
Yeah. So we have an investment team of 9 people, 4 of which are on the investment committee.
Okay.
5 are partners. 4 of the partners are on the investment committee, and then there's a 5th investing partner. And essentially every deal has to have a partner sponsor. So wherever we're sourcing it from, whether it's coming from a partner relationship or whether it's coming from an associate or a principal that's sourcing the deal, every deal has to have a partner associated with it. So that partner really carries the flag into the team and says, I believe in this business because.
Yeah.
There's a lot of back channel conversation. Usually, I'm an investing partner in the deal. I'll usually bring in one other partner or something at some point to confirm, make sure I'm not crazy, make sure that, we're looking at all the right things, maybe even get some kind of feedback that I can drive, due diligence questions around so that it's a bit more of a broader view on the business. But ultimately, before it actually comes to the investment committee and the investment team, you've got a couple of partners that are supporting it. You've got, a team together, whether it's the associate or the principal behind the deal. Also, we have a whole backbench of executives in our organization, kind of a unique way that we've approached the business. And usually we'll pull them into deals that are relevant to their expertise. And so we'll have a deal team. We will present a case. And that case in the early stages of the discussion will go into the investment committee, into the investment team as a whole. And as an investment team, we review and we kind of do this internal poll and we figure out, who's warm on it, who's cold on it. And we use that session to really collect the what needs to be true statements from across the team. So, for this business to be a viable, needle mover or whatever for our fund, here are the 3 or 4 or 5 things that need to be true. That drives our diligence questioning. And then what we do is when we come back with a full memo, we come back with most of those questions, well, pretty much all those questions checked off and answered one way or the other. Yeah. And then that is the determination at which point we go back to the investment committee and we say we want to do a formal vote. We have a half hour, 1 hour, sometimes 2 hour discussion on the business. And then ultimately we'll go through the polling, do a vote, and determine whether it's the right deal for us. And we have a interesting point system between the 4 of us that kind of validates. It essentially says you need to have 3 out of the 4 that are at least somewhat committed and supportive of the deal.
Yeah, and with your fund too, then how many investments roughly are you making per year?
We've moved pretty quickly this year. We've seen an interesting, I think because we just launched the second fund, we had probably a backlog of a lot of relationships that kind of came to the fore. So we have somewhere around 8 core investments this year. We'll probably do another 12 or so next year, get us to about 20 core investments. And I think that's our target for the fund. We may go to 22 or 25 with some follow-ons on the feeders. Yeah. We have more feeders. I think we'll probably end up doing 30 or 40 feeders, some of which will graduate into Series A, some of which may even graduate in the next fund into Series A, depending on the timing of their evolution. And so that's kind of the range, probably 10 to 12 core big check investments a year, 20 total. So it's like a 2-year investment strategy around that, and then a whole bunch of feeder investments to go behind that.
Yeah, and then just for context, how many companies are you roughly seeing, do you think?
We did analysis on this, right? So 1,500 we'll see in a year. Not all of them get discussed and reviewed. Everything gets reviewed at the top of the funnel. Yeah. But obviously that filters down pretty heavily, pretty quickly.
Can't go through 15.
So we actually set our target to 1,500. We're actually on pace to see more than that. There's a lot of stuff out there, and not all of them are the best ideas in the world, but
of course.
But there's some fun ideas, and there's some actually really good ideas, and we pick and choose. And we're not going to always catch the best. We actually have a process by which we review the market on a quarterly basis, and we make an assessment of, hey, are there deals that we didn't even see that we should have seen, or are there deals that we saw and said no to, but then some big, player in our space came in behind it, and why, and what was the reasoning for our decisions, and we're just checking ourselves and making sure we're making good decisions.
Yeah, and knowing that the number of investments you're making, and you're seeing though that many companies, how many are you, or how are you keeping tabs on ones that are a no right now, but you're thinking on the border and maybe on the fringe? How are you tracking those ones, or how do you keep in touch with those people then?
Yeah. Well, we have a real focus on community in general. So we like to retain community. We've, building out newsletter. We do a lot of events. There's a lot of things we'll do that the people that we really believe in, whether we've invested them or not, will want to invite and want to make part of that. We as all partners, we retain relationships with the network of founders that we know as well. So we kind of maintain that relationship. There's 2 scenarios. There's a scenario where we did not get into a later stage deal, at which point the recognition is that, that deal is, by the time it goes to its next phase of funding, it's going to be too big for us. We're not going to be in a position to do it. So, we'll keep tabs from a market perspective, but we'd kill ourselves if we were constantly watching every single company we said no to. So we just don't generally follow those. Yeah. The smaller deals that are too early stage for us to do a core investment in, if we like it, we'll do a feeder.
Yeah.
And that's the way. And then we track it as part of our portfolio, and then we'll see it mature to the next phase. And then the ones we really like that are at that $2 to $7 million sweet spot, obviously we put the check in, and those are in our core portfolio. So that's how we think of those.
And then speaking to the portfolio itself, I mean, can you talk to maybe one or two companies that you do really like and the reasons behind that, and how, like, why they've been successful up to this point? I'm just curious about anyone in particular.
Yeah, absolutely.
I'm sure
Different stages. So one company in probably the most advanced stage of the companies we're working with is a company called Capsule. It's a digital pharmacy based out of New York right now. They'll do probably more than 100 million in revenue, I believe, in New York this year. Wow. And they're expanding. They took a big investment. We actually took an abnormally big check, but an abnormally small amount of equity in the business because we just see the opportunity to be so big in order to allow them to expand to something like 23 or 25 states.
Yeah.
So we see a model that is proven, that is solid, that is making money and growing organically. It is very applicable to markets outside of kind of the metro New York market. And the only limitation they've had is geographic. And if we're funding their ability to take that geographic limitation away, there is just a very natural growth trajectory there. There's really very little to prove. It's an operational challenge, and we really believe that the team is strong and capable to execute on that operational challenge. So to us, that is a pretty amazing opportunity, to be given the opportunity to participate in that alongside some pretty great other investors. So we're super excited about that. And that's probably the latest stage of the businesses that we've invested in today.
Right.
Some of the earlier stuff, we have a business out of San Francisco called Lightning Labs. They actually provide the transactional underlying protocols for Bitcoin financial transactions on the Lightning Network. And they are very dominant in that space, in the Lightning Network space, which is a kind of highly coveted environment for developers. And we believe that they're building a platform on which I think they have somewhere between 5,000 and 10,000 developers building apps on top of. Jeez. They're building a platform on which a whole industry is going to be built, which is very aligned with how we see consumer behavior and finance in the future.
Yeah.
So as digital currency becomes much more transactionable, we believe it's going to become much more part of general consumer behavior. So to us, again, we got into a very highly contested round, and we're able to participate. We're welcomed into the group, which was very an honor for us to be a part of it. And ultimately, we see an unbelievable opportunity on the other end of that because we think the business is just got a very natural, inherent future place in kind of consumer behavior. Another interesting company here in Los Angeles called Emerge, haptics technology, AR, VR basically provides the ability to touch and feel three-dimensional visual objects without any gloves or without any kind of attachments. It's like the future right in front of you. And it is really, really exciting, much more conceptual, whereby the other two, you can kind of see the applications. Capsule, you can see the application today.
Yeah.
Lightning Labs, you can see the application in process being developed by the community. And then Emerge, you see the applications for the future. It's much more visionary. And so with Emerge, they're in the stage where they've built this incredible technology. They've proven it, like we can touch and feel it. It's amazing. And now they're beginning to build that developer audience that's going to build the applications on top of it. It's a much longer term vision, but for us, it feels like a very natural progression in how consumers are going to interact in AR, VR, how they're going to interact with three-dimensional imagery, whether it's right now it's with glasses, but in the future you can have three holographic televisions and all these different three-dimensional environments, and it just becomes a very natural extension off of that direction of technology. Yeah,
and you mentioned having high competition again in one of these deals. I mean, what is that like trying to get in on some of these deals when it is high competition? How do you think you have an advantage to do that? Can you speak to that a little bit?
Yeah, I think we really are trying to break the mold. We're all operators, so we think about it as entrepreneurs investing in entrepreneurs. I've been involved in a number of companies. Myself, most recently at DigitalOcean, I was chief operating officer for 6 years. And so kind of we've experienced a lot of the growth, a lot of the growing pains. The various members of the team are either horizontal experts or vertical experts, but at a very, very high level.
Yeah.
And so, when we go into companies and meet with founders, there's a certain amount of empathy that we have for what they're dealing with and what they're going through, which I don't think every investor has. I think we have a unique advantage there. And I think that we're able to connect with them on a real entrepreneur-to-entrepreneur level. Now, obviously, there's a lot of entrepreneurs turned investors.
Sure.
The value add, I think, on top of that is that our mission, our kind of vision of going in is how do we partner with these founding teams, and how do we actually supplement their capabilities with the backbench of resources we have, so that we're able to actually come in and actively help them achieve their goals, make better decisions, get through strategic problems that could take them months to resolve without the right expertise. And I've personally had a lot of experience where I've been in amazing high growth companies, but we've spent a year spinning our wheels on an issue that we just don't know how to resolve. And that's just a lack of expertise and a lack of, particular knowledge on the bench. And so we present ourselves and present the way that we want to work with these companies. Right from the first conversation, we're talking very strategically about their businesses and helping them think about the problems they're facing. And we found that, with our relationships and our core skill sets across our team, we've been really welcomed by the founding community. They really recognize the value. The companies that are already in our portfolio are incredibly positive about the impact we're having. Speak very highly, become incredible references for us. So we're kind of really just presenting a different way to think about your investors and how you want to work with your investors. And I think that's creating a real attraction from the founders' perspective. So there's a lot of deals. It's actually not just founders.
Yeah.
Even other investors coming to us and saying, we want you in this deal. There's space. It's not what you want. It's not, the full position you want, but there's enough space to include you. And we want you in this deal because we think you can add a certain amount of value. And we've gotten it both from founders and from the investor side. And we've had founders introducing us to their other investors saying that we're super helpful and meet M13. They've been amazing for us. And so it's just early days yet because we just built the structure, but it's seeming to really prove itself as a valuable construct of how venture should be thought about.
And now we'll take a quick break and hear from our sponsor, Brex. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. And back to the show. So speaking to that expertise and kind of that experience you guys have on the operating side of it, I mean, what are some of those challenges that entrepreneurs face typically you've seen, and how can you help them kind of through those things?
Yeah, I mean, there's entrepreneurs facing endless challenges, right? So every challenge is different. Every company is unique. The first challenge I would put right on the table is that most entrepreneurs, most founding teams, especially first-time founders, meet each other in a coffee shop or because they went to college together or, be careful of this one, but because they're family.
Sure.
Right. So you never have a perfect meld. Founding teams are generally not engineered founding teams. So there's always going to be the risk that your team is not fully qualified to execute on the job in front of you. So what I found pretty consistently is when teams comes together of 4 or 5 people, 3, 4, 5 people, within the first year or two of operation, some of that team is going to just move away, either because they were right for the time, but they're not right for growth, or because they're just not, qualified to execute on the responsibility that they have right there, or that they're just not comfortable once you raise money and you have to build hierarchy and it's not a flat organization anymore. So it takes a very unique type of person to be a founder, and that has its benefits, but it also has potentially its problems. So a lot of things we see right at the beginning is just what is the dynamic between the founders themselves, how are they working together, how are they able to get the most out of each other, who's taking the de facto leadership position in the team, and how's that all coming together and working. And I think that's an important consideration for founding teams right at the outset. I think then, the challenge of problems really comes with the timing of the business. As you go through, we've actually mapped it out in terms of what's this business life story arc,
Right.
from inception right through to growth and like late stage funding. And we've identified different components across that path where you're able to say, at this point, they just raised $10, $20 million. They're going to go into a high growth hiring mode. They're going to have certain cultural issues. They're going to have to introduce hierarchy. They're going to have to think about culture in a different way. There is a lot of issues and responsibilities there. We can be proactive and helpful in that because we can make sure that they don't shoot themselves in the foot and just create an imploding machine. There are business model challenges where you say, okay, this business is tapped out in its ability to expand with these economics. It's going to have to consider either a broadening of its offering or a different economic set, different acquisition cost. And so if they don't navigate those, or repricing or market pressure things, if they don't navigate those things, that again can be a problem. So we can get ahead of that. I think maybe one of the biggest problems we see is when businesses don't listen to their customers. And so often, not often, thankfully, but sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
Yeah.
This is usually before a Series A because you kind of have to demonstrate some level of fit before you get to get a real check. But it is in the feeder checks and in the earlier stage of the business. It is a significant risk because you may really believe in the model, really believe in the vision, but if they're not actually executing on the product in a way that speaks to the customers, then you're taking a real risk that you're just not going to get the traction, you're not going to get the validation you want. And so those are some of the things, there's a multitude of them, but those are some of the things that we look out for. And if we're partnered in the business, then we are very proactively trying to help resolve and think through those before they become a problem for the company.
Yeah, as you say that. So how do you communicate those things to them though? Because these startups, obviously, they're trying to grow their company.
Yeah.
And I think they know what's best.
Yeah.
But they also bring you on board because of your operating experience and stuff.
Yeah.
And so how do you communicate that to them? You're like, hey, what we've seen in the past, this is something that you're trending towards XYZ. I'm just curious like how that kind of
so we have a protocol. When we make a core investment in a business, we set up what we call an onboarding. It's an opportunity to get our operating kind of executives, our backbench team out at the table with the founders to do a full 3-4 hour session where we're going through, a core set of strategic discussions about where the business is, what they're trying to do, et cetera, et cetera. From that, we identify the areas in which we can be helpful. And we let them know, hey, these are the things we think you need to be thinking about. These are areas we can be helpful. Here are the people that we have that can help you with that. And I think pretty much in every case, the founders come back and go, yes, please, come get involved. We set up a Slack channel with them. We have communication paths, and we have multiple connection points with them. There's always the lead investor that really owns the relationship. Will sometimes have a board seat.
Sure.
But we have a multitude of different connection points across our team that all have kind of an opening to participate and get involved in a very planned way with these companies to be as impactful as possible.
Yeah.
And so we're right from the outset, we're proactive about figuring out where they're going and what they're doing.
Yeah.
A lot of the alternative is we make an investment, we sit back and we wait for the first board meeting, but that's just not the way we approach these businesses.
Well, especially with like your expertise in particular. It just makes a lot of sense from that perspective.
And I think that's what they're kind of expecting from us when they take our money. So if we didn't do it, they'd
you
probably
didn't
be like,
say
wait a
anything.
minute.
Like,
You said you were going to be helpful. Where are you? So
that's why you're on the cap table.
Yeah,
like, come
exactly.
on. And then just looking at the overall like kind of startup ecosystem, what industries or areas are you most excited about? Technologies, anything that you're most excited about right now?
Yeah, there's so many growth areas that are really interesting. I think some of the key things we're thinking about is, we like finance, currency, personal finance. We really think it's trending more towards digital solutions, and a little bit more democratization of kind of financial controls, kind of putting it in the hands of the consumer.
Yeah.
And so we believe in that. We've kind of done a couple of investments in digital currency. We believe in healthcare, especially as it relates to wellness, somewhat of the democratization of kind of big pharma and big healthcare, and kind of bringing it into much more boutique offerings that are really catered to the individual, to the consumer. As I mentioned, mental wellness is a big part of that. So not just care and service offerings, but actual products that support and promote mental wellness, something that we're really supportive of. We think that's a big transition in the way people think about healthcare in the market and over the next 5-10 years. We believe in transportation, short-term transportation, clean tech transportation. We've got really interesting investment in clean tech, like premium clean tech vehicles, but we think that there's a lot of changes in the way that people are moving around. We don't think that the new Gen Z market is really interested in buying cars. There's different approaches towards leasing. There's different approaches towards rideshare.
Yeah.
So there's a lot of interesting things happening in the way that consumers kind of use technology to advance their ability to be mobile. We also think workplace improvement is a really interesting environment. It's an interesting thing for us because we think of it as a B2B2C. It's still affecting the consumer, but the consumer in their workplace.
Right.
And thinking about platforms that are focused around real-time messaging, versus old school email, and just what are the technologies that are changing the way in which people work. We know that the workplace is becoming much more distributed. There are a lot of technologies that are speaking to the idea of a distributed workplace, how to make it more effective, how to manage it. So those are areas in which I think we also have a particular interest.
Yeah, which is exciting. There's a lot of different things going on, obviously. A lot of things to look at as well.
And you have to include CBD. But I won't say any more about that. But that's a pretty exploding marketplace.
But clearly.
Kind of the Wild West of
is.
investing. But there are some interesting platform-based opportunities there as well.
Yeah, of course, and we'll see where it goes. Yeah. And how have you seen kind of the venture world itself kind of evolve recently, and where do you see that going as well?
I think it really, the big changes that I recognized as an operator really started, 10 years ago. Andreessen kind of led the way a little bit in terms of thinking about platform as investment as a platform rather than investment as a banker. I think historically investment has been a very financial consideration. A lot of people were investors from the beginning of their career and became investors for life, and some really amazing ones that just have an incredible knack and understanding of how to judge companies' potential success. I think that what's happened in the last 10 years is people have started realizing that there's always these ebbs and flows in terms of how people think about companies' growth. So back in the 90s and early 2000s, founders were often formally replaced at a very early stage of the business with executives, and they would take whether it's positions within the organizations or positions at the board level. The founders would kind of remain part of the organization, but they would have professional managers coming in and operating. I think with the evolution of companies like Facebook, there was a transition to this belief that founders, great founders, were the ones that should run the company through the life of the business. And over the last 10, 15 years, that's been a real mainstay. And then recently, with recent outcomes of some major companies and the problems they've had with core founders and their ability to transition into a real corporate role,
right?
You see more and more hints that people are thinking again back at, should we be thinking about professional managers? Should we be thinking about changing the way in which people run companies or grow companies? I think that the way we think about it is we still believe in founders. We believe that if you're good at putting the right founding team together, there is a heart and soul to that team that is very difficult to replicate. We do think that supplementing founders with the right talent is meaningful and helpful and required, but that the core founders do provide real value in terms of the future story and the vision of the business. And what we think the change has been is that as opposed to solving the problem of founders with less experience by just replacing them, we think the future is the people who have proven themselves, the operators turned investors, that is kind of been the burgeoning segment of the investment market, have to be more actively involved in the guidance, mentorship, and success of the founders within their portfolio. And so we've taken it to another level beyond that to say that actually as an organization, we should be committed to the success of the founders in our portfolio. We should only work with founders that we believe have real potential to build businesses, and we should actively get involved with helping them figure out where they're missing information, where they have blind spots, where they actually need support and help, and even how we can help them hire to fill in longer term needs for the business. And so I think in terms of what's the direction of the investment community, I think we're setting an example of making a huge financial commitment ourselves and investing ourselves in the talent needed to help these founders. And I think more and more will be, credibility will be put to the model where if you're actively involved in driving founder success, you're going to have a better performing portfolio, you're going to have happier founders, you're going to have more success in general, and that's going to drive better economics. So I think that's the direction that VC will continue to go over the next 5-10 years. And these will become, it's kind of a collapse between the separation of incubation and acceleration type operations and purely investment operations. And there's this kind of meeting in the middle where you're not actively incubating, but you are driving acceleration and support that helps founders find success.
Yeah, way beyond just the money, the financial, like you
exactly.
mentioned. And to that point of helping founders themselves, then, I mean, what are some of those things they should be thinking about on like the fundraising side? So obviously we talked on like the VC side from the VC perspective of them, but what should the actual founders themselves be thinking about, or questions they should be asking through that process of fundraising then?
Yeah, so we touched on this earlier. I think founders that take money a week after they met someone is just a risk, right? I think founders should start their fundraising effort months before they actually fundraise. So they should go out and find, good investors that they can build relationships with, they can get guidance on, make sure that they share a sensibility, share a belief system, can work together. And then when it comes down to the investment itself, it becomes a lot easier to have those conversations and actually bring those people in as partners. Yeah. So I guess that's it. The first thing is, these are your partners. These are not like tertiary investors that you send a report to once a quarter. These are your partners. And so think about your investors as partners. Get to know them and make sure that there is some complementary support mechanism within that group. So if you as a CEO are very strong in certain areas, you'll need to supplement that, your blind spots with appropriate mentors and guides and advisors, basically your board and your investors, in a way that they can be really supportive and helpful in the areas where you need support and help. So I do think it's really about making sure you're signing up for the right relationship, making sure that you're getting value beyond money. Yeah, there's a lot of money out there. Get value beyond money, and focus on how's this actually going to have a long-term impact on your business and on yourself as an individual, your growth.
Yeah, and Karl, how did you get to this point of being in venture?
Yeah, so very long story. It took me 25 years to eventually get into venture. So I've been an operator for a long time. I founded my first company in 97. I sold it in 2000 and then went to do an MBA in 2001. And then after that, I had another company, which I exited in 2010, following which I joined DigitalOcean and obviously left that, helped build it from the ground up and left that company at the end of last year. At that point, 250 million run rate, 500 plus people, like a pretty good, well-established growth company at that stage. And so for me, I'm not getting any younger. And where I had boundless energy 10, 20 years ago, I don't have as much boundless energy. And God bless all the founders out there that, eat ramen for 2 years and, don't sleep day and night to try and, experience find their vision. Yeah.
You're not still on that type of level?
No, I'm kind of, I've done that a few times and I feel good with what I've done.
That's fair.
I think the thing for me that I've really enjoyed in the last few years as I've become more mature in my role and I've become more kind of maybe recognized as an operator in the industry is the time I've spent with younger founders that are building new companies. So I've had the opportunity to work with and mentor a handful of different companies, invest in some cases over the last 9 years, 8-9 years. And it has been the joy, like absolute pleasure for me in realizing their success and seeing people really kind of grow and shine and find success of their own. And that's been the most enjoyable part of what I've done outside of all the direct work that I've done myself building. And so, coming to 6 years into DigitalOcean at the time, like 5.5 years into DigitalOcean, I was really thinking about, what's the next stage in my career? And I really felt as though a horizontal, rather than kind of this vertical focus on a single company, a horizontal opportunity just to work with a great portfolio of really, really great founders was directionally something that I would really, really enjoy and something that I think I could be really good at because I felt like I really added value to the companies I've worked with today. And so I met, I've known Carter and Courtney for a long time, the founders of M13. And we started talking actually the end of 2017. And then I started advising them in 2018 on a periodic basis to help them kind of build the structure for this fund 2 that we just launched. And ultimately, we really saw eye to eye on a lot of the philosophies. We really think about investing in as an operational company, not as just a finance company.
Right.
We really think about disruption, innovation, kind of changing the model, changing the way people think about it, becoming more impactful as a result. And it was a real blessing to kind of have them as in my network and as a relationship. And over a period of a year, we kind of framed out and designed exactly what we're landing on now. And it just was a very natural time for me to move on and kind of come into this. And so I actually told DigitalOcean I was going to leave in the summer of last year, and then ended up staying till the end of the year to help transition myself out, and then joined in January, joined M13, and then helped build the team we have today. Really was part of just getting to the point where we've closed out this pretty good sized fund. And executing on the model that we put on paper. So, I feel really good about having landed here, and I'm enjoying it. I'd say probably best job I've had in my life, loving it. And so every day is a joy.
Yeah. And okay, we have to go back for a second because you exited 2 companies and also helped DigitalOcean go like a couple $100 million. I mean, what are some insights you have from those experiences? Obviously, it's like you said, 25 years. Like, what are some insights though that founders would find useful from that? Because to not ask about that, I feel like would be a disservice to the show.
Yeah, no, absolutely. I mean, listen, I have a mountain of just things that I've seen, whether they've been directly affecting me or in companies that I've mentored.
Sure.
And so I just have a huge amount of pattern recognition. I can also recognize, issues that companies are going to face before they face them. I can also recognize how to think about building a business model that can truly grow and scale. And I've seen plenty that don't have that capability. So,
Sure.
Just there's a lot of things around just the process of building a business that I've just seen, it's a lot. Like I couldn't, it's a book, right? So I think the one commonality is that every situation is unique and different. There are patterns you can recognize and there's guidance you can give, but at the end of the day, your gut is still going to drive a huge amount of how you approach a situation. There's guidelines, obviously, but still your gut is going to be the ultimate way. And honing the gut is really the key. So how has my experience honed my gut to help me recognize a problem set, solve it, et cetera, et cetera. But everybody's journey is unique. I will say to people, reading books is amazing and important. Don't think a book is going to answer all your questions. Don't read a book and just follow the instructions A to Z. Like, take books for what they are. They're a set of experiences that, add to your, arsenal of references when you deal with the situations you're dealing with. And so a lot of the times I've referenced things that have happened in other companies, but time changes a lot. Circumstances change a lot. A lot of things are different for every situation that these founders are facing. Maybe one other common thing is, find the right partners, find the right mentors, put the right people in the seats at the table and on the bus. Like, that's probably the most important thing you can do to set yourself up for success.
Yeah, and looking back at those things too. So obviously, it's 2 exits too. I mean, what did you look for at the time in terms of opportunities? Like, how did you look at businesses you wanted to start, or even DigitalOcean, pursuing them, like actually joining them? Like, what did you look for at the time?
Yeah,
I'm curious about that too.
So it's different. The first one was just not having a clue what I was doing, being with a bunch of people I liked, and just think about some crazy idea that we wanted to build something. So it was just much more random.
Yeah.
I would say every big decision I made became a little bit more coordinated.
Yeah.
The second business, so the first business was a kind of it's in the late 90s. It was a business it's kind of the similar technology to where Nest or Ring have ended up with their camera technologies, but it was an all-in-one camera solution that could create a network of camera video capabilities and access across an industry, and we applied it to a lot of different industries and put it out, and in a pretty decent volume. And back then the technology was very, very different. But that was really, I honestly didn't have a clue what I was doing. We were just engineering a product and trying to get it out there. The second one was a little bit more structured. It was literally me after having finished my MBA thinking, what's something I can do that's going to be interesting, and bartering with different friends of mine, and then landing on something which seemed to be a real need. It was in fintech, and it was much more global, and it seemed to be a real need. I had my co-founder at the time, who became chairman, was actually running a pretty big company that was facing this problem. And so I partnered with him, and I built the system to solve the problem for this company, which ultimately allowed me to solve the problem for a much wider audience. And so that was, still pretty big risk. We still built the business model from zero up.
Yeah.
And so the only thing to recognize was that there was a big need and there was a big market opportunity. And we were going to a very dysfunctional space that just didn't have the benefit of technology. So those were the markers that made it very interesting for me. With DigitalOcean, because it was an established business, they had just launched their product, I was able to really, really look at much more of the real evidence. Like, there was definitely product market fit. There was huge traction. It was very early days. They were doing, I think the first month I walked in, $50,000 a month in bookings, right? So very, very different to what it became. But you could just see month over month the amount of engagement and excitement and attachment and energy that was not only within the team, but with the consumers that were connecting with the product. And in that situation, I actually spent a couple of months working with them before I officially joined, and I helped them build their financial model and their plan. And it was just a great business model. Yeah. You just played it out, and you could just see this incredible organic growth. And, I was projecting out for them that they could do $100 million in 3 years, and everyone was like, "You're crazy." I'm like, "But, the numbers just tell me." Yeah. And so when I had to make the decision to join, I'm like, well, if I really believe the numbers that I'm putting on a piece of paper, then I should do it. And for those first 3 years, we hit those numbers spot on. So it was incredible to kind of see that growth and see it come to reality. But that was different because that was where I was being adopted into an existing team.
Right.
I was seeing a real existing business, a real existing model. And, there's lots of lows and highs in the whole 6-year journey. But ultimately, it's just been an incredible experience, learning experience, growth experience. Great success. It's just been a really good experience for me that whole time.
Yeah, and you bring all of that then to your investments.
Yeah,
so
exactly.
So people who are watching this know the type of experience you have.
Yeah, exactly.
And then one of the last things I was curious about is like, how is your time spent day to day?
Yeah, so I blend my time. Of the partnership, I'm the one that's really responsible for the backbench and the operational piece of the business. So I spend my time blended between helping navigate how we want to apply our resources to the portfolio of companies we have and how impactful we're being with those companies.
Yeah.
And then the other half of my time on kind of building the network and relationships necessary to find great investments in the market. So it's a blend between those two activities. A lot of, as we're building our systems and processes, we're kind of at this point starting to build a full community platform for all the, for founders. A lot of those pieces, are squarely on me.
Yeah.
So I'm working with my team to kind of build out product requirements for our platform, build our strategy as it relates to community and activities in that regard, build our processes and our kind of institutionalization of all the services and kind of knowledge and capabilities we have into a way that they can be delivered to these portfolio of companies, and then ultimately managing how we're applying our resources to these different companies to get maximum impact.
Yeah. And Karl, where can people go to reach out, connect with you, learn more?
They can connect with me at Alomar NYC, Kalomar NYC. So that's on Twitter, on Instagram, obviously LinkedIn. And then also just M13.co. They can jump on the website, kind of take a look at what we're doing. And, always happy and excited to talk to people and see what they're up to.
Awesome. Thank you so much for the time today.
Thank you. Appreciate it.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.